Hey everybody, it's Ron from Ron's Basement. Thank you for joining me today. I am going to talk about Antero Resources, one of my favorite little stocks I've been following for a few months now. They are in the gutter, they're in the basement. Their stock price is close to a 52-week low, which is also the case for most of their peers, so they're not alone in that regard. There's talk about them maybe going bankrupt. They have some major debt that's going to be due in the fall of 2021, so about 18 months from now, and then another tranche that'll be due in the fall of 2022. But something very interesting is going on with Antero that I don't see going on with most of their peers. Antero, in the midst of all of this, is repurchasing huge amounts of their stock. In the last 2 years, so from the beginning of 2018 through right now, so a little over 2 years, they've repurchased over 10% of their outstanding shares. That's a big, big amount. If Apple Computer or somebody like that did that, it would be like front page news. So it's a big, big deal that they've repurchased all this stock. What's even more interesting is that in the last 4 months alone, so October, November, December of 2019, plus January of this year, during those 4 months alone, they repurchased right around 6% of their outstanding stock, which doesn't make sense for a company that is supposedly in a state of, they're going to be in big trouble financially. Not, the big question surrounding Antero is, how are they going to pay off all of this debt that's coming due in 2021 and 2022? So for them to be using what should be precious cash to rebuy shares in the public market, that doesn't make any sense. But what I'm going to try to do for you, I have a theory. I'm going to try to make some sense of it. And, people may be looking at Antero right now thinking they're crazy, but I think they might just be crazy like a fox. So let's move over to my whiteboard, and I'll go through a few things that I've written out and give you my thoughts. Okay, folks, so here we are at the whiteboard. It's not really a whiteboard, as you can tell. It's some brown napkins, but to be honest with you, that was all I could find when I had the idea and the inspiration behind this video, so bear with me. And one more quick thing I want to say is a lot of the meat of what I'm presenting, a lot of it I dug into and found myself, but there's a decent portion, good portion of this that was brought to my attention by a Twitter user. His name is Contrarian8888. So thank you, Mr. Contrarian. So this just kind of outlines what's gone on with Antero in the last 2 years. They've repurchased 10%. In the last 4 months, they've repurchased 6% of their outstanding stock. Why? Are they crazy? Why would they be buying back shares over the last 4 months? They probably have spent at least $40 million in the last 4 months alone to repurchase these shares in their company when they're facing this huge debt crisis, that supposed huge debt crisis, which threatens to throw them into bankruptcy. Why would a company that, in theory then would need every little last penny piece of cash they could get their hands on, why would they be using that money to repurchase shares of the stock? And another thing that's very interesting is they're doing this in what I consider to be almost stealth mode. They're making the minimum required disclosures. They aren't creating a lot of fanfare around the fact that they're basically repurchasing a huge portion of the company in the public market. So what's going on? Well, I have a theory. And my theory is they're not crazy, but they're crazy like a fox. Maybe they know that they have their debt situation under control. Antero has a lot of good, solid assets, a lot of options. They could monetize a hedge book that right now, as of today, February 18th, 2020, likely has a value of at least $1 billion. They own a huge stake in AM, which is Antero Midstream, which is their midstream sister company. That's probably worth $600 to $700 million. They could sell a royalty. I don't know specifically how much they could raise through that, but I do know that their competitors have done that recently and were able to raise hundreds and hundreds of millions of dollars. And Antero is one of the bigger players in the industry. So they've got that option. They also have a revolver, bank revolver loan that they could use to monetize some of their debt. So maybe Antero knows what they're going to do with their debt, and as a result, they want to buy back that debt at as steep of a discount as possible. Their bonds are trading at a discount now, but maybe they want that discount to be even better, or they want to keep that discount in place. So buying back huge amounts of stock for them, number one, is a great deal. Okay, let me just briefly dive into this. At this point, the value of the company, the market cap of the company, allows them to buy back assets for 7 cents on the dollar relative to what they originally paid. Yes, when you take all their assets, take out their liabilities, the remaining amount of assets relative to the market cap of the company, the market cap is equal to 7% of the assets net of the liabilities. So basically, they're able to buy back their assets at a 93% discount. So it's a really good deal for the shareholders when they do that. The other thing they do when they're buying back their stock is they're keeping cash off their balance sheet. But why would they want to do that? Well, if they're interested in keeping their bond price low and they're interested in keeping this perception out there that they might go bankrupt in a couple of years, if they keep that cash, that very most liquid of all liquid assets, off their balance sheet, it's going to, from a debt rating perspective and other perspectives, keep their bonds lower. They're going to get lower bond ratings, and they're going to get lower bond prices, basically, which at some point here in the future they're going to be refinancing or monetizing on their own. So that's and the final point is then that so when the debt is retired, they'll be able to buy their debt back at an even lower discount. So my theory is that they know what they're doing. They know that they've got the 2021, 2022 debt issues under control. So for the time being, they're going to keep buying back as much stock as they can, which is going to make their liquidity, from a liquidity perspective, make their balance sheet look a little worse, which is going to make the bonds less valuable, lower the bond prices, so that when they do pull the trigger, when the jig is up, they'll be able to buy those back at a much lower price and move forward with a company with a lot fewer shares outstanding. The opposite of dilution. Undilution, I don't know what you call it, but the people that do own the stock, which, by the way, includes insiders, because the insiders own, Paul Rady and Mr. Warren own 16% of the company, they and us will be doing really good. Who may not be doing so well are the short sellers, because they're going to have to buy back an even bigger percentage of the company, almost 18%. So let me flip over to my second slide. I think I'm going to be repeating myself quite a bit, but if you want to stay with me, you can suffer through this. The second slide that I put together, or second napkin that I put together, I entitled "The Game: Antero Stock Buyback, Negative Feedback Loop." I think to a certain degree what they're doing is creating, purposely at this point, a negative feedback loop. When they use their cash to buy back stock, they're making their balance sheet and liquidity look bad. As a result of that, lower debt rating, lower AR bond price. As a result of that, the stock price goes even lower. You hear everybody talking about them going bankrupt and blah, 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 blah. And as a result of that lower price, they're able to buy even more stock And as a result of that, again, even a lower bond rating. So I think that they're going to keep doing this, and I think they're smart. They're not doing anything that I would find to be illegal or deceptive or anything like that. They're going to do this until the jig is up and the debt situation is addressed. Again, they've got hedges they can monetize. They've got a stake in Antero Midstream they can monetize. They can sell a royalty. They can roll stuff over to their revolver. But when the jig's up, they'll be able to buy that debt back at a much lower price. And they would have accomplished two things. They can refinance their debt at a lower cost, and they would have repurchased a big chunk of the company. Good for shareholders, of which 16% are insiders. Bad for shorts, who will need to buy back an even larger share of the company, 18%. So I hope that makes sense. Again, essentially what I'm saying is that these guys at Antero know what they're doing. They're not crazy. They're crazy like a fox. Thanks for watching. I hope you enjoyed my video, and have a good night.